Hi, hello everyone. Hope you all are doing really great. So, you've decided to start a super revision from today. So, let's start. We'll start with accountancy. And before starting the lecture, let's agree on some basic things. First one, together agree on this. So, I'm agreeing and hope whoever is watching the video is also agreeing with me. First thing is, it is a revision, not not at all a full syllabus coverage. So does that mean I'll skip anything? Oh my god. No, I'll not skip anything. But then there's a difference between explaining it for the first time and making you revise. So this is a revision. Assuming that you all have done once, at least once, all the chapters at least once, right? So before watching it, make sure that you have done the chapter once. Now, the second point, very important. Hope you all have watched yesterday's video and you are here. You have your notebook and a pen or a pencil at least. Hmm? Notebook or some pages. So you need not buy a new notebook or have a proper classmate notebook for this. No, no need. You can have any normal notebook or rough book or some rough pages with pencils to scribble down whatever we are learning in this lecture or in this whole revision series, because writing is equally important as learning and understanding. So you're only understanding? No, not enough. You're only remembering? Not enough. You have to write, understand, and reproduce. So writing is very, 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 very important for our board exams, right? And the last one, very, very important again, sit. You have to sit and study, not sleep and study or sleep and just see it like a podcast, because this is nowhere related like a podcast. This is a complete lecture that I am recording specially for you, for helping you guys. Right? So read it. When you're studying, please sit in one place, whether you're sitting on a desk, you're sitting down on the floor, anywhere. Please sit, right? And so don't just lie on your bed like that when you're watching the video, like you're watching some podcast or a movie. It's not a bedtime story, it's for your revision, it's for you. Sitting is important for you and not for me. So, if we are agreeing on of all these 3 points, let's begin with chapter 1 of accounts. What is chapter 1 of accounts? So, at least we know the name. I hope you all know the name still. Accounting for partnerships, basic concepts. So, as the name suggests, this is basics of partnership. This is not like a whole partnership account that you have to prepare, like the admission and all. These come in your subsequent chapters. This is the introductory chapter for partnership. This is the first chapter of your class 12 first textbook. You have two textbooks. I hope you remember that you have two textbooks. This is so basic. This much so I can explain. Chalo. Accounting for partnerships, basic concepts. So, how will we go through the flow of this chapter? So, I have divided this chapter into 5 portions: nature of partnership, partnership deed, maintenance of capital accounts, distribution of profits, and special accounting aspects. So, I have divided this for easier revision, for a more structured revision, not like random studying and all of it. Just to make it more structured and help you revise. So when you're revising this chapter, you have to revise it in 5 parts. Right. Cool. Let's move ahead. And also, before again going into the depth of the chapter, I would request you all to open a notebook and write this so that you can prepare the mind map with me. Also, I don't have any problem with sharing the whole mind map that I'll prepare with you, like while teaching you I'll write down too. I'm not asking only you to write, I'm writing it with you. So as I told you, we'll ace your board exams together. So I'll write it down. I'll write everything down with you. So I've made a basic structure of the mind map. We'll create the whole mind map together as I promised you in yesterday's video. So this is the basic structure. Please pause the video, write these 5 points down and play it immediately. Not like I'll write it down and then I'll continue the lecture later on. No, no, no. You have to pause the video and start writing it down. And start it immediately again. Like immediately means immediately. Yes. Okay. So I hope you have written all of this. Don't go ahead before writing. It is for your betterment, not for me. It's your board exams, not mine, because I've already passed board exams now. That's why I'm teaching you. Chalo. Let's start. Starting with nature of partnership. So before going into the nature of partnership, I mean, we'll go into them. Before this, tell me, how do we understand the meaning of partnership? Is it defined somewhere? So, the nature of partnership, acha, and one more thing, I would suggest you to make your notebook in landscape rather than keeping it in portrait mode. I mean, what is the portrait mode? Make it landscape so that it's easier for you to write. You have more space to write, right? So, nature of partnership. So, before starting with the nature, like going into the elements of partnership and all of that, first for and foremost thing, the word partnership is defined under section 4 of the Indian Partnership Act 1932. I hope you all know this. I mean, if not the section, at least the word Indian Partnership Act. Have you heard this? I hope you all have done. So, what is it defined as? Under Section 4 of Indian Partnership Act, the word partnership is defined as, I'll write it down for you people here. Write it down with me. Please do. That is a relationship between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. Right? This is the definition given in Section 4 of Indian Partnership Act 1932. Done? Cool. Let's move ahead. So this definition highlights few essential features of partnership. And those features that will go one by one. First one is the partnership is obviously between two or more persons. Isn't it quite logical? Why? Because obviously, if there's only one person, what is it? A sole proprietorship that we have done in class 11. So in class 12 is partnership. Two or more persons are required. And here the Partnership Act also mentions minimum 2 and maximum 50 partners in a partnership firm. So you cannot have more than 50 members or less than 2 members, because if less than it's 2 members, so already it's a sole proprietorship. Then moving ahead, there must be an agreement agreement of partnership. So by this again, so the agreement should be oral or written. How? Agreement is agreeing on something, agreeing on terms. So Partnership Act says it can be oral or it can be written. So there's no restriction that you have to have a written agreement. My oral agreement also works. And then the agreement must be for a lawful business. So what does that mean? You have to do lawful activity for making profit. Lawful activities for generating profits has to be done. Generating profits is the business. Why lawful? Because you cannot do illegal things. Illegal things are not allowed. So, if you are making a partnership tomorrow, saying that you'll kidnap somebody, this is not a legal partnership and not a valid partnership. So, for partnerships under Partnership Act, be recognized under Partnership Act, it should be a lawful business. Right? Right. Then the next point is quite important. That says about mutual agency. Who all know about mutual agency? You remember? Something, something? Thoda sa? No? Okay, no worries. So it says there must be a principal and agent relationship among partners for each other. So that means every partner is an agent of another partner and a principal. So there should be an agent and a principal relationship. This is the core concept of partnership, right? So this is really important in your MCQ point of view as well, because this is the core concept of partnership. You have to remember, what is the core concept of partnership? Having two partners? Having an agreement? No. The core concept of partnership is having mutual agency. So mark this as your MCQ important point, right? Next, moving on. The next is sharing of profits. So sharing of profits must be there. Sharing of profits also implies sharing of losses. So losses can be called as negative profits. So sharing of profits and losses. So you cannot have profits and losses together. So it's like if you have a profit, you're sharing that as partners, and if you have a loss, you're sharing that as partners. And then the last one, that is liability of partners is unlimited. Unlimited. Unlimited matlab? What does it mean by unlimited? Unlimited means the personal assets of each partner can be used to repay the firm's debts if firm is not able to pay them. Right? These are the points under nature of partnership. Moving on to the next part, that is your partnership deed. So, a very important, very basic question. Why do we need a partnership deed? So, what the partnership deed is required to regulate the partnership smoothly, to regulate the firm smoothly. So, who does what, who gets what is written in your partnership deed. It is a written agreement containing terms of partnership. So while writing along with me, don't try to make good handwriting. It's okay, you just scribble it. But the scribbling should be at least enough for you to understand when you open it next time. Don't forget that. You can just scribble it. No need to make like the fair notes with colorful pens, underlining it with glitter pens and decorating it. No need to do it. Okay? Moving on. Next point is, what are the contents of partnership? So your contents of partnership include, tell me, what does it include? Do you know? Hmm. Name of partners. Obviously, partnership deed. You have to know who are the partners before dividing the responsibility or before knowing how much capital they're getting. So next point is capital contribution. Then you have a profit sharing ratio. Right. Then we have interest on capital. Then we have interest on drawings. Drawings is what the partner takes home from his capital. Then you have partner's salary or commission. Oh, ma'am, you just said that you've already written profit sharing ratio. Why are we writing partner's salary and commission? So if you are getting this doubt, then this video is not for you. You have to, I already specified, I already mentioned this is with an assumption that you've already done the chapter. Still, I'll just clarify it. Partners sometimes take more than the profit share. Why? Because instead of employing another person, say the partner is working there like an employee as well, apart from being the partner of the firm. So he has to get extra. So he'll get it in form of the salary. And commission is also of such kind. If he's getting sales consistently, he'll get commission of on the sales. This is just an example. Sale commission is just an example. There could be many other reasons why a partner is drawing a commission. Right? Now, partnership deed, is it mandatory? Yes? No? Maybe? What is coming in your head? What is the first answer that you've got? So, people who have said yes, very bad. Because it is not compulsory. Partnership deed is not compulsory. Partnership deed is a mm, recommendatory thing that is given in your partnership act. It's not necessary that you have a partnership deed. So, what if the partnership deed is not there? If it's not necessary, so when someone says this is not necessary, this is like you can just do it, or you cannot, you need not do it if you don't want to. Say, oh, if I say you can attend the class, or you need not attend the class, it's your wish. Will you prefer to attend the class? No, we won't. Why will we attend the class? If I give you a question, if I say for homework and I say you can solve the question, or it's okay if even if you don't solve the question, will you solve it? Ideally, you should, being a student. Won't. Extra, why do we have to work, na? So, ऐसे ही, in the same way, what if the partnership deed is absent? If partnership deed is absent. So, what happens is the Partnership Act, the Indian Partnership Act has already given some rules that have to be followed. Now, if you have a partnership deed, you follow that. If you don't have a partnership deed, if you're just being lazy and you didn't create a partnership deed, then you have to comply with whatever is written in your Indian Partnership Act 1932. So, but what is written in Indian Partnership Act? Okay, I will comply. But what is written in Partnership Act? We'll get to know now. The first one is profits share, shared equally. So profits are shared equally. You are allowed to have a different profit sharing ratio, but when you have a partnership deed, if you don't have a partnership deed, then you have to share it in equal proportions. So the profit sharing ratio by default becomes 1:1:1, right? Remember this. If you have a partnership deed, you can have your own rules, own profit sharing ratio. But if you don't, you have to mandatorily share your profits equally. Then, so in the question, and also, but in the question, they'll say partners have agreed to share the profits in 2:3 ratio. Will you say, hey, there's no partnership deed, I will share it in equal ratio? You don't have to do that. When they say the partners have agreed to share the profits in certain profit sharing ratio, that means they have partnership deed. Okay, that is implied that they have a partnership deed. So partnership deed is a written agreement, right? So written agreement is partners agreeing to some points. So please don't make this mistake. Keep partnership. If we have partnership deed, then we can have a different profit sharing ratio. So the question is not mentioning that it does not have a partnership deed. So we'll share the profits in equal ratio. Don't do it. If something is given in the question, follow it. Blindly follow it, right? Because question is right. Question can never be wrong. No, I'm not saying about the calculation mistakes or the figure mistakes. I'm saying about the profit sharing thing, like very importantly about that point. Okay, the next one is no interest on capital. Huh. Ma'am, what are you talking, ma'am? You just it's some few minutes ago you just said interest on capital in partnership deed. Yes, I did. I did. Yes, I did. I know. I remember I have written it. But here, what are we talking about? We're talking about the partnership deed is absent. Partnership deed is not there. In that case, the Partnership Act, the Indian Partnership Act says you cannot pay interest on capital to the partners. So, if you want interest on capital, that means you should have a partnership deed. So, if you don't have a partnership deed, don't come running that I want interest on capital, I want interest on capital, you won't get interest on capital. Why? Because Indian Partnership Act doesn't allow it. So if some act is not allowing it, then how will you take? Right? But remember this Indian Partnership Act says if you have a partnership deed, follow it blindly. Like close your eyes like this and follow your partnership deed. If you don't have the partnership deed, then follow me. Open your eyes like that and read what is there in the partnership deed and follow it. Right? Then 6% interest on partner's loan. So on partner's loan, the interest that is allowed is 6%. Then the last one, no salary or commission to partners. So please remember this. All these points apply when there is no partnership deed. So if you have a partnership deed, you can very well have your own profit sharing ratio. You can very well take interest on your capital. You can very well take salary and commission. You can give as partners of the firm, right? Chalo. Moving on to the third part. We're done with the second part. Now moving on to the third part. Maintenance of capital accounts. So how many capital accounts will you maintain for a partner? Ma'am, it's two, isn't it? Right? Wrong? What? Some people are like, yes, 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 it's two. Some people are like, ma'am, what are you talking? So, people who are saying, what are you talking? Good. So, for a partner, like for one individual, will maintain how many accounts? Capital accounts? One capital account per partner. Now, there were other people who were saying that I was saying, right? Ma'am, what are you writing? What are you writing? It's two capital accounts, fixed capital and fluctuating capital. Then, my dear, all the cute little students, no. The thing that you're talking about is the methods of maintaining capital account. You'll have only one capital account per party. The methods, what? Methods of maintaining capital account are two. You're right. Now it's that is first one is fixed capital. Second one is I'm writing it a little lower so that we can write the other points that we have to write under fixed capital. The second one is fluctuating capital. Right? Right? Shall we move ahead with me? I hope you all are with me. Don't sleep. Hello, hello, hello. Anybody sleeping? No, right? Very good. Chalo. If you're sleeping, chalo, wake up. Come on. Thoda sa. Little bit is left. Very little is left. This much, this much. Trust me, this much is left. Let's go ahead. So, fixed capital method. In fixed capital method, the capital account remains fixed. Not the capital account remains fixed. So that means we don't pass any entries, we don't record any entries starting in the starting beginning, whatever the capital that the partner has got, we'll record that much and that's it. No. How will that be possible? What if the capital is introducing more capital? The partner is introducing more capital, you'll not record it. You have to record it, na? So you'll record only when capital is introduced or withdrawn. Okay. And what about the other things? Will not record, will not maintain accounts. Why? Capital account to remains fixed. No, will not maintain accounts, will not prepare profit and loss account. Arey, no, Bobby. No, you have to maintain, na? Everything should be clear, na? Everything should have a record, na? So for that, you'll maintain a separate current account for recording all other transactions. What will we record? What do you mean by all other transactions? Ideally, you all should know this, but I'm telling you again, interest on drawings, interest on capital, then tell me what? Tell me, re. Bolo. Say something. Salary and commission. And the last one. What did I forget? Yes, very good. That is share of profit or loss. To prepare the profit and loss account, you have to prepare the profit and loss account like normally. like you used to do in 11th class for sole proprietorships. It's the same way. After you get the profit figure, what used to happen in sole proprietorship? The whole profit will obviously go to the who? Whom will it go to? The sole proprietor, the owner. Now, in partnership accounts, who are the partners? Partners are the owners of the business, na? Joint owners of the one single business. So, in this partnership, what will we do is we'll make trading profit and loss account, and at the end, whatever is the profit, we'll share it to the partners in profit sharing ratio. That is share of profit or loss, right? Understood? Very good. In fluctuating capital method, it is very easy. There's only one account that has to be maintained. All transactions are recorded in this account. Okay. Very important point. $100 point here. $100 is very much on this date. That is, when your question does not specify the method of capital account that has to be prepared, please assume it to be fluctuating method, right? Don't use your brain. Don't at all just take an assumption that I'll solve it by fixed capital method. Don't. Unless and until it is specifically given in the question that you have to solve it by fixed capital method, go for fluctuating method. Understood? Printed, get it into your DNA. Okay? Don't at all forget it. It is very important to remember this. That is, question is silent, then solve by fluctuating capital method. Also, by the question also you'll understand. See, sometimes the question will be silent, but you will be given the balances of current account. Then though you have to understand that current account, you have to solve it by current account. So if the balances of current account are given, then you go by fixed with this method, fixed capital method. If there are no current account balances given and the question is also silent, that which capital account method that you have to choose, then go for fluctuating method. Don't tell me that, ma'am, you only told that when question is silent, go to go for fluctuating capital method. If there are current account balances in the question, please do it by fixed capital method. If there are no balances and the question is silent, so let's just change this. Um, okay. If there are no current account balances and also the question is silent, then go for fluctuating capital capital method. Good, very good. Some more, thoda, little more energy and we'll do it, right? Are you with me? Chalo, a little more. Push a little more harder. I mean, in the studies, right? I, I mean studies, right? Hmm. So now, distribution of profits. What is meant by distribution of profits? Distribution of profits is after calculating the net profit through your trading account and a P&L account, the profits are then distributed to the partners. How are they distributed? They are distributed by using profit and loss appropriation account. Have you heard of it before? My friend, if you haven't heard of it, then you're in a big, big danger. In that case, if you've not heard of this profit and loss appropriation account, this word, if you haven't come across this at all, then I think you should now stop scrolling Instagram and start focusing on your board exam preparation. At this point of time, if you're not knowing what is profit and loss account, profit and loss appropriation account, then you're in a big, big danger. It's like danger into X 10x danger. Stop Instagram, stop YouTube, stop everything. Snapchat, Facebook, everything, every social media, and stick to your studies, right? So, profit and loss appropriation account is an extension of what? Extension of profit and loss account itself. So this is also important. Profit and loss appropriation account is an extension of profit and loss account. This is important for MCQs. So I think I have already mentioned 2-3 points about MCQs. Okay, let me do this. After we're done with this super revision series, I'll get you one more video with all the MCQ tricky points and traps for your exams. For accountancy, one video will have, for economics, one video will have, and for business studies, one video will have. Okay? I'll cover all the MCQ tips and tricks and traps that you will have in the exams and what are the points and everything in that video. Okay? Still, you can mark this as MCQ important. And now, this is an extension of profit and loss account. This so we have understood. Now, what is it here? What is about this? What is appropriation? Appropriation is distribution, something like distribution. You have something, you give it to, like, what are you doing with that profit amount that you've derived? This is the profit amount that I have derived from the profit and loss account. So, what am I doing with this amount? So, where is it being applied? Where is it going? This is what is shown in profit and loss appropriation account. This is how that is how the profit. Oh, I'm sorry. How the profit is appropriated. Appropriated is not earning. Appropriated appropriation is distribution. Earning is shown in profit and loss account. Appropriation is distribution of profit and use of the profit that you have already earned. Now, in this, what are the items that are adjusted? Items adjusted through this account. So, here, what are the items that are adjusted? First one, interest on capital. Then there is interest on drawings. So, under interest of drawings, there are one more thing, that is the drawings can be monthly, quarterly, and over a period, or like equally over the period. So is covered in the question, the master question that I was talking about in yesterday's video. We'll have a separate video for that. So refer to that video about this, like how the interest on drawings is calculated, when the interest is drawn monthly, when the interest is drawn quarterly, and when interest is drawn evenly over the period over the year, right? Refer to that video. You will understand it better. But for now, I'll write this point here that interest can be drawn monthly, quarterly, and evenly through the year, throughout the year, right? Hope you all are writing it down. Please, please, please write it down. Please try to write it along with the video. You can't make notes at this point, at this juncture of the time. You cannot afford time to make notes again. So, however you're writing, neatly, dirtily, clumsily, however you're writing, but write it, right? And then partner's salary is also adjusted through the P&L appropriation account. Then partner's commission. Then the last one is after adjusting everything, you'll derive the final profit that has to be shared. Then from that you will calculate final share of profit or loss. So exactly how to calculate this is covered in our master question video that will be uploaded as well, right? And then the last part, last one, we're almost done, almost, little bit. The last part, just push it, just do this part, and then you're done. If you are here, you have consistently watched this video till here, then hats off to you. It's like you're really great, right? I'll appreciation, clap, clap, clap for everybody who is watching till it here continuously, not break, right? So, apart from regular profit distribution, partnership counting also includes few points. One is guaranteed profit. Guaranteed profit. Here, partners, any one of the partner or two of the partners will be guaranteed a minimum profit if the actual profit or loss is not, if actual profit is not enough to meet the minimum guaranteed profit, then the deficiency will be borne by the remaining partners, right? And then, so all these are like practical question types things. So we have covered everything in the master question video. Refer to that as well once it is uploaded in 2 or 3 days. So this is a concept revision basically. Then there are past adjustments. So past adjustments are like some errors that have been committed in the last years and all of that. So this is like your errors and omissions chapter in well, class 11, if you would have it for sure. So this is like and that same kind of a thing. How do you adjust it in the current year? So errors or omissions of previous years are corrected, and then uh, these errors are adjusted through P&L, profit and loss adjustment account, right? These adjustments are corrected through P&L adjustment account. That's it. These are the two special aspects. See how beautifully we have made this chart, right? Hope you have also such beautiful chart with you all, right? So now, if you like the video, if you find it helpful, please do like, share with your other friends and subscribe to the channel now so that you can watch all the super revision series and revise better, perform better, because reading randomly will take you more time. You cannot revise this whole chapter from NCRT textbook. I can bet you cannot revise this whole chapter from NCRT textbook in this uh, less time. So subscribe it for the future videos as well. All the videos shall be released by this weekend, that is Sunday. Sunday is 1st of February. And what else? That's it. Make notes, revise nicely before board exams. Don't stress out yourself. Please take good care of yourself, take good care of your health, eat healthy food, drink lots of water. That's it. Take care, guys. Don't forget to like, share, and subscribe. And also, please comment if these videos are being helpful to you, please comment in the comment section. That really gives me a lot of motivation to make more videos, right? Your comments and your anything extra that you need, anything that you need from my side for good better preparation, then I would really try to provide you with everything if it helps you. Okay, chalo then, take care guys, bye bye, meet you in the next video.